Yo, what is up, guys? Tonight I will be going over crude oil, and I want to do a little recap on what I've been saying in past streams. So let's start with that, and then from there on, we can look for further opportunities in crude oil. So, in my last stream before I went on holiday, I was talking about this liquidity void, this important gap for me at least, since I believe I was doing a certain analysis at the same time before this weekly open, and then news came out and it jumped straight up and pretty much invalidated one of my ideas. One of my ideas was when we were around here to go back inside this gap, make a swing failure pattern of this particular low on the 4 hour, go back in this gap, hit this mitigation block, and then run up higher for these highs. But it really didn't do that. The news came out about crude oil and it gapped up. It pretty much gapped up 6.5% approximately. And that created this volume gap. So on a week open, we came down initially and then we just hovered around for almost a week, leaving this volume gap, liquidity void. And at the same time, we were looking at this power of tree setup with the accumulation phase around here, the manipulation down, uh, starting at March, going into April with the manipulation around here, and then the distribution up. And we did get the distribution up. We turtle souped or swing failure these highs pretty much. If we are on a daily, and I'll cover this. On the daily charts, I believe it was, we had an old fair value gap over here that got pretty well respected. Or was it the 4 hour? Let's see, or the weekly. There was a fair value gap over there. I guess it was a daily fair value gap. Anyway, we had a fair value gap over here that got pretty respected. We nearly touched it again. We had a little fair value gap over here as well, so a double old fair value gap. And the only thing we did was we swing failure these highs, and we failed to break through this section of the chart. And we nearly touched the old gap again, and then we got a sell off again. So when that happened, in my last stream, I was saying that I'm looking for another. I believe we were at this stage of price action around the 13th of April. I was looking for another rise up or a failure swing, and we got the failure swing in the end. And then I was alerting you guys for if we see a breakdown and we, first of all, we break below this little fair value gap over here. So this one. Should we break down lower, then I'm looking for this fair value gap. So this is the first indication for me of bearish price action, even though we were in this larger distribution phase. In the end, it already did its job, and we swing faired these highs and these highs. So distribution done in the end. First indication of bearish turnover is violating this bullish PD array. Then the second one for me was this little fair value gap. So we broke down, we came inside this gap, then we hovered around it, we created a fair value gap, and in the end, the bearish one got respected, and it didn't even come above this old gap. So this gap was pretty much a balanced price range at that moment, and then we sold off further. So that was your indication of a much deeper retrace. And then I was emphasizing about the importance of this liquidity void. So first we came inside this gap, this remaining liquidity void gap. We came at around the equilibrium of this gap. We hovered around it, then we got to push through higher, but it failed to come above that gap. See how well respected these 4 hour candles are on the top end of that gap, at the same time with a mitigation block over here. So bearish price action still gets respected. And I was saying in my last stream, I believe, if we break out of this gap, then I'm looking for lower towards this low and ultimately the end of the local current low that we made back in March. And this was price action as a whole while I was on holiday. And it has been respecting bearish price action ever since. And in the end, we got an expansion move. The first target beyond this low, that was the minus 3.5, perfectly hit on May 3rd this year, swing failuring this low with a huge bounce of 8% after we took out this low. So the job done. So we came down 20% from this little segment of price action where the bearish PDR race became respected and the bullish one became violated. And ever since, you had several opportunities to go inside the train and target lower. Like we had one over here. We had a very aggressive entry over here. I didn't take it myself over here. I hovered or I looked at price action the way we came down here, and then I entered, I think, over here. But he had another opportunity over here, even another opportunity over here where we came a little bit in this gap. And in the end, we broke lower. We created a breaker. Breaker, very well respected. And then a huge sell off, just selling, 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 not even retracing a little bit, just major sell off on oil. I don't know what happened, but I saw all my alerts going off. And in the end, I was watching price action live when we were close to this low, and it was just one big dump lower. I believe when a new day opened, and then a sudden rise up in Asia, retracing the whole damn thing, and then we came back up for another 14.5% bounce just by swing filtering this low. So very nice price swings on oil. And now I want to look further on what we can expect on oil. So I am using the CLM 2023 delivery contract for June. That's the current delivery contract for the future market on crude oil. And I want to look what we can expect next. So in terms of narrative, crude oil has been chopping around in a downtrending consolidation range pretty much since July last year. So almost a year that we are further in price action, like 316 days so far. Just very choppy, wrecking shorts, longs, long shorts, up and down ever since July last year. So the narrative on higher time frame is consolidation, but we are still going down. But it's not like a sharp sell off, like a sharp rise up we have over here. Yes, we had one over here, but since that first drop of June last year, we went in consolidation mode. And yes, we came lower, but we rose again. That we came lower again, we rose again. But in general, it's just one big range, really. So it hasn't really done anything significant still. And I was expecting, while we were anticipating of this power of tree setup with our accumulation, manipulation, distribution, I was actually looking for these highs to be taken, and then maybe a bigger turnover when we went in May, June this year, and then turn over for the rest of the year. But it really didn't have any strength to go beyond these highs. So we got our big sell off and we actually took the local low, and now we have a new one. So still weakness in price, no real strength, even though it really looks like it's strong. It's not really strong at the moment. And after current sell off, we came back in this gap. I believe we filled it for 50% at least. Yeah. So, yeah, nothing really major. We do have another gap over here that we have been getting into, and then we jumped out of it. But after we jumped out, we respected the midpoint of this bearish fair value gap again, and we sold off again the today, with in mind that we have Fed Chair Powell speaking tomorrow, so at the end of the week. So I'm looking, I'm curious to see what price action will do from a higher time frame perspective. Since we turtle soup or swing failured the highs over here, we swing failure the low over here. So buy side taken, target sell side taken. So now the question is, are we going to rise up again and flip to bullish price action? Since that's all oil has been doing pretty much for the past months. I would be very bearish if we see this kind of sell off or this kind of sell off breaking this low. That for me would be very bearish on oil on the short term going into the summer. And if oil is going to do that, then I'm looking for these lows at least, since they are relative equal on a higher time frame perspective. And we have a order block over here as well. Then I'm interested in the midpoint of that order block, which would take out these lows. And if we even look on the monthly chart, so from a monthly perspective, it looks still bullish because we are in this fair value gap, and no candle body of a single monthly candle has closed outside of it. And it looks like a retracement, really, like a little bear flag type of price action when you look at the price run as a whole and then the sell off going down. It's really indecisive. Look specifically at the bodies. ICT always says wicks do the damage, bodies tell the story. Well, you can see wicks do the damage because we wicked right beyond this gap in March. We wicked right beyond it in this month, tapping this mitigation block. Why is it a mitigation block? Because this was another chance for a price swing lower, but it failed to break this low. So mitigation block on the water shorts. And now it remains to be seen after we took out this low if we are going for a rise up again, going for these highs. I would really like this for oil to go higher, but I would turn bearish if we close May around here, and then in June we retest this till approximately the midpoint of this fair value gap and then react from it and then go lower, then I would be interested in these lows because these are too clean in my eyes. And we have a little gap over here on the monthly as well, and that's way lower on oil. But that's something I would be interested in. But that's from a very high time frame perspective. So let's go for a more local one on the daily. The same is applicable for the daily chart right now. As long as price holds this fair value gap, I'm expecting a little bit more upside on oil, going for these highs because these highs are just too smooth. Like this is just a trend line liquidity basically, all buy side liquidity. Smart money or large institutional players have collected their short opportunities over here. They are just riding the whole wave down. Retail is going to short as well, but they are trailing their stop losses. But also the large funds, because the large funds are dumb and they don't really care. I mean, so naturally you would be looking for trailed stop losses of a large group of retail traders or large hedge funds or whatever. And as long as this gap holds, I'm looking to go back higher and take these highs to purge out all the liquidity resting on these daily highs, basically. On the flip side, we can still wick through it like we saw on the monthly. And should we wick through it, then I'm interested in the midpoint from this rejection block. So this is a very huge rejection block at the moment, created after we took out that low. So we can still wick through it, taking out these lows on the daily, go back in this rejection block, and make another wick from this, and then go back higher, closing inside this red box, and then continue higher. Then you have like a bull flag, basically. And then we look for continuation, right? So if we were a pattern trader, I would look for continuation if we saw something like that. And the logic behind it, I would say, is a inducement type of model for price action. So with inducement, we often see we create a significant low, right? And we come back up higher. We have a fair value gap or something else, a order block, a breaker block, mitigation block, whatever. We create certain lows over here. We tap a little bit inside it, or we fail to tap inside it. Then price runs higher, but it doesn't really break the high yet. It makes like a failure swing high. So like this. Then it runs back down lower, inducing short selling. While it just takes the local lows, goes back inside a gap, or even lower, something else, and then run higher. That's something you often see on lower time frames, but it can also happen on higher time frames. I'll use the polygon, so that's a little bit better to see. We go higher, lower, and then really higher. So that's short inducement. Because people that went long over here, they think it goes higher and we go after the high. While smart money is the counterparty of this particular logic. They want to go lower first, stopping out the early longers, so to speak, then pump higher for without them, basically. That's what short inducement is, and the same for long inducement, of course. That's something I would be interested to see in uh, tomorrow's price action when uh, Powell is speaking. If we make a large wick from this and then go higher, or or you just bump straight higher. But that's something for tomorrow. If we're going to look higher, we have an old fair value gap over here, but that fair value gap over here between this candle's low and that candle's high has been efficiently delivered already with buy side. We have almost filled up this entire gap as well. So I'm not interested in that. We have already taken the sell side liquidity, so there's no need to go way lower if price action is going to be bullish in the end. We do have a lot of relative equal highs over here. This swing high is relative equal to that swing high, and I count this as relative equal as well because it's not really like perched like this. So we have like relative equal highs over here. That one got perched really well. This one, I'm not really convinced that that's a perch or engagement of sell stops. I think there's a lot more sell stop resting above these highs. So even though this looks like it's very bearish by a sell off, I'm not really that bearish by this move. But my preferred scenario to go up higher, then go way lower, that's a little bit invalidated in my opinion. But yeah, if we see another sell off like this, breaking this low, then I'm interested in these lows to go after. Because we still have a fair value gap slash volume gap over here with a low inside it, so we can swing for that low pretty much. So let's mark that down at 95.06. So this is a fair value gap with a liquidity void. It's almost filled. I'll mark it like this. Green, solid, green, extend to the right. Then we have a little low that tapped inside it. And that one we can swing failure. And I want to know what the midpoint of this whole gap is. Extend it to the right. That's the first target I would look for if we break lower indeed. Then a second target for me ultimately be a low. These lows are relative equal. So I'm gonna mark that one. That's the lowest one. It's a second target. That's all I'm interested in right now. Nothing more, really. And I'm doing that because we are still in this gap. And also that gap has not been violated yet. So equal chance right now of breaking higher or breaking lower. So market is very indecisive, doesn't really know what to do. But the overall context of oil is ranging. And that's why I'm not really expecting anything major now. Because I was expecting something major when we were over here and we were breaking up higher. But after the weakness again, filling in this void and just selling off, going for a low, I still believe that oil is just doing this going lower, lower, maybe hit something like this, and then go higher. Yeah, that remains to be seen in the coming weeks when we are going into the summer period in July, August. I believe that's an OTE setup. Yeah, and then we have target way lower. So should this break down lower and we get something like this from a sell-off, a 1-to-1 would be another 30% down from where it's now. Yeah, that's quite a huge sell-off, in my opinion. But it just depends which one is going to be broken first. And that's what I'm going to monitor for the coming weeks on oil. If the green one, the bullish one, is being violated, or the bearish one is being violated. And with violated, I mean closing below it. So we can still, like I said, we can still go lower for a certain day, like tomorrow, go to the midpoint of this rejection block, then come back up higher and making the daily candle with a large wick, like over here, and then push higher. That's something we can still do. And for me, still accepted. But if we come back lower tomorrow and we close even below the midpoint, so let's say tomorrow is a huge sell-off and we close at around here, very close to this particular low, then I'm expecting further sell-off going in this particular fair value gap, swing favoring that old low from December 2021, like a year and a half ago. That's really my higher time frame view, and that's, I'm not really going to make it any more complicated. It's like as simple as that for me. It's just whatever gets violated first, and the one that gets violated, I'm going to neglect, and then I'm going to follow the bias of the opposing uh, result. Meaning, if we break this, I'm going to be bearish, looking for this. If we break this or violate this, I'm going to be bullish, looking for these highs and maybe go way beyond these highs. Let's go in the 4 hour. What has the 4 hour done? So the 4 hour makes it a little bit more clear in my eyes. It's a lower time frame. You see a little bit better what price action has done. So this is a whole price swing from this swing high to this swing low. It created a large inefficiency on sell side, or actually uh, sell side imbalance, buy side inefficiency, large scale on buy side inefficiency that pretty much got delivered almost to the top of this one. But then again, we broke lower and it's back in consolidation. So what can we say about this particular zone on a 4 hour chart? That we came back in the higher end of this. It got respected. I believe the point 25 got respected perfectly. And then we got another sell off locally. We came back in this gap. And we have a slight lower lower one over here tap inside it, but my eyes would be on the larger one, not the lower one. So you could argue that this was violated, but we had a lower one over here, and that one got tapped inside, and then we got another buyback. So I'm not considering this as violated as of yet. And this is pretty much the same view we had on the daily time frame, but the daily time frame is like a gap over here. The 4-hour one narrows it a little bit more down, in my opinion. So what I make up from this, based on how price action has been delivered since the sell-off, is we attempted to go higher and refill this whole imbalance or inefficiency, so to say. We succeeded filling or delivering price action efficiently from this to this. Then we came at the higher end of this inefficiency. That responded in a sell off again, going back for this inefficiency on sell side liquidity. That one got efficiently delivered, and since then it has been hovering around. And we have attempted to go higher this particular week, but we came back lower again. So we have to see what tomorrow brings. I think tomorrow will give more clarity on crude oil with Powell's speech. So I'm going to be monitoring that at least. But yeah, the thing is, this whole week is just ugly in my eyes, and it has already been efficiently delivered with sell side first and buy side afterwards. It's just one big wick, and you can't really do anything significant from that wick other than the open, which is the start of the rejection block, the midpoint, which is equilibrium or consequent encroachment. You may have heard that term as well, and ultimately the stop losses that are resting below this. And the midpoint or a quarterly level like a 0.75 or 0.25 are important because of the algorithms that run these markets. They are algorithmically programmed to respond to these quarterly levels like a 0.25, zero point 0.5, and 0.75. That's just the case. I can't really deny it. It's just like over here, they respond very well to these levels. So I'm always aware of those levels. But with such large wick, I'm not really interested in that wick. I'll rather see a huge sell off like this whole run down, breaking this low. That's that gives me a little bit more confirmation of a bearish bias than just giving a large sell off, swing fillering the wick or the old low, and then trying to push higher while it looks bearish. It can still go higher, 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 higher while it looks very bearish. But yeah, we have to see which one of those gets violated first. Should we shoot up again and we break this last fair value gap, then I'm looking for the highs to be taken pretty much. That's an end target. We have relative equal highs over there. And ultimately we have the first one over here. So if we are bullish, I don't say we are, but should we be? Then I want to see a violation of this particular gap. And I want to see a shoot up. Maybe take the high. We don't really have to, but maybe take the high. Because we have a little order block over here. And we have an old gap over here. So it's somewhere in between that zone. Then go for a retracement. Retesting this gap. Find support out of this gap. And then push higher for taking the highs. That's something I would really like to see if we are bullish on oil from a higher time frame perspective. But we are also in a consolidation environment. And in a consolidation environment, it often goes from lows to highs to lows to highs. It's just range bound, really. And there's no clear direction, even though internal ranges or internal trends um, are set. Like we had a very internal direction over here, but at the larger scheme or at the grand scheme of things, it's still range bound. So it hasn't really done anything significant. So we can still do this, go after the highs, and then going into June, roll over again and go for the low. We don't know until the asset itself is giving us a certain direction, breaking higher, breaking lower. But yeah, should we be bullish? Because we have been going lower and lower and lower since last year, June, pretty much, after the top was in. And it doesn't really look like a sharp, like a very sharp snap of sell off. If we look at all the months together combined, it's just a trending channel down, waiting for a breakout higher. And what I would like is to go for these highs, pretty much. But it has to give us some more strength, basically. And this would be a first step. If it then doesn't sell off again, of course. But yeah, that would be a first step. So if you look on the 1 hour, that one looks. So the 1 hour created a fair value gap over here. That price came back inside it immediately after the wick was created during London into New York. And then we pushed up higher. And then we still have a large wick over here. I want to see price action. Still a large wick. So even on a lower time frame, we still have a very large wick. And that really bothers me. I don't really like that wick in particular. It's just ugly. So what can we look for on a more local time frame? So we do have relative equal highs over here. That's buy side liquidity. Something that I'm interested in. And we are in this larger gap on the 4 hour. If we make it a little bit more narrow, we are in a 1 hour gap over here. Then we have another large gap on the 1 hour above. That's basically the 4 hour gap. So I'll leave it the same. Then we have a mitigation block over here. Pretty much this section is a mitigation block. And why is it a mitigation block on the 1 hour? Because we had a large run down. We came up higher. And this particular price swing down failed to take out the low. So that's a mitigation block. And those shorts are all on the water right now. Why are they on the water? because price is higher. So yeah, it's around 3% higher. So those shorts are on the water and they might need to be mitigated. What has happened already over there by tapping the mitigation block. So that mitigation block has been tapped. I'm going to mark that down because it's all related to context and narrative. So what can we expect next? We had a huge run up, pretty much efficiently delivered all this price action over here. We created some fair value gaps, but we broke down. That is considered violated. Like we broke down lower, we even retested this fair value gap. So that looks a bit more bearish on the mid time frame, more locally. And then we might even look for a retracement lower. We have a little gap over here still. We have this breaker block still, that it's still fresh. Why is this particularly a breaker block? Well, it's the structure of price action. So if we make a run short term, we create a short term high, and we have a little retracement lower, it creates a short term low. If we then have another higher taking out the short term high, then run lower, breaking the short term low, we have a breaker structure. And what we then expect is the highest up close candle or the lowest down close candle or candles, depends how it's structured. We expect a retracement inside it and then a continuation either lower or higher. And that's what we have over here. So we have an initial run lower. We create a short term high. We take out that short term low. Then we break away from it, making this a breaker block because this is the largest up close candle after or prior that it was broken with this price action. So that's something that we should mark down as well. And I don't really want to see it go lower than this. Actually, I want to see price action going higher because we already sold off so much and there's so much liquidity resting going higher. So there's no logical, how do I say it? There's no logical reason to go way lower because price has already done its job. So what I would like to see on price action is go back in this breaker. We can target the high of the breaker. I always like to target the midpoint of a breaker or a fair value gap or whatever. Since this is not really too bearish, I would just place my stop loss over here, pretty much. And then a first target would be for an almost 3-hour trade, go for the local high. I believe this is also a OTE setup, or at least an OTE retracement. Yeah. So you could take partials over here, or you can aim for the 1-to-1 that would take out this high, particularly. And then you have a very nice trade if you go for that high. You can target for the 1-to-1 or the actual high over here from this price range. But I think for starting, this will be a very nice trade. The only thing that bothers me is that this was not a single candle leaving a fair value gap. If we had a fair value gap over here with the breaker block, that would be a little bit stronger in terms of how powerful the setup is. But nevertheless, we went already lower. We tapped a mitigation block. We went higher. We broke structure over here by going or impulsing away from price action, leaving a breaker. And this would be a balanced price range. And I'm always marking those purple. So what I would like to see tomorrow or during Asia already, on a new day, Asia into London, is that we go lower. We might make a first attempt to go higher, then induce short selling lower, then go higher. That's something I'm interested in, and I would take because it's still a good trade. And then look if price action is willing to go higher or not. But we do have to bear in mind tomorrow we have Fed Chair Powell speaking. So it might also be the case that price is just going to do this on a lower time frame. And then when Fed Chair Powell speaks at this time window, we either shoot down or we shoot up. That's like a daily, that's an actual daily template. That's like consolidation before a news release, and it's going higher or it's going lower. That's an actual daily template. So if that's to be the case, I would sit out. If tomorrow is going to be a very consolidating trading day until Fed Chair Powell speaks or is going to speak, then I would rather sit the trade out. And I don't think this would be very high probable anymore, because the market is going to await what the chairman is going to say and pretty much reacts to his words. If he's going to say something really bullish, the market is probably going to dump. And if he says something really bearish, it's probably going to pump. And that's just a manipulation event. You can't really fight it. It's just going to happen either way. And that's the only thing when I would not consider this trade for now, because we are so close with that news driver event. And with the fact that we violated this fair value gap that turned in a balanced price range, we are retesting it. So there might not another reason to go lower or higher. But that's for tomorrow to just to await. If we do get normal price action in Asia or London, then I would consider a trade like this and maybe target this high for the New York session in the AM or lunch maximum. And let's say if we get something like this and you get an entry over here and we go actually higher and we are at the lunch hour window and we are close to this high, I would just close it and be happy with the trade, in my opinion. This is still a good trade and you are not risking yourself a potential loss, or worse, if price is going to rip higher or lower. You don't know, because it's basically a casino when the Fed chair is speaking. And the same with things like CPI or FOMC or whatever. That's like a casino. You don't really know what's going to happen, but we as traders, we anticipate on a situation. We do not react on price action. That's a major difference that I think many traders don't know or don't understand. So I'm anticipating right now, from a normal point of view, without any news drivers or sudden chairman speaking, that price is going to go lower to this breaker, look for uh, support, then go higher for continuation. That's my logical view of price action if I look at this particular chart. But with Fed Chair Powell speaking, I have no clue what it's going to do. it may as well, like I said, just consolidate the whole day, awaiting what kind of things he's going to say, and then the market is going to respond to it. And that's really the only thing that will hold me back for this particular trade. So I hope you guys understand that and be careful with not blindly taking this trade, because in the end it's you who pushes a button and not me. I'm just giving a certain idea of what price action might do. I might not even take it myself, but that depends on tomorrow's price action, really. So if oil, well, let's talk a little bit more about the daily template that I was talking about. What I mean with a consolidation upon news release, it's pretty much like you see over here, but that's too wide even, that's just too wide. I think this would be a very nice example of a consolidation range. So you would see this type of price action throughout the whole day during Asia, London, and New York. Then the Fed chair would start speaking, and then you get something like this. So, like I said, it's just ranging, 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 and then suddenly it shoots up or it shoots down, and you have no clue what it's going to do. You can, however, anticipate what it's likely going to do. So let's say I'll I'll use market replay for this. If you were here, like I know this is Tuesday this week, but for the sake of an example, if we were over here and this was our trading day, this might be a consolidation before news release event. Actually, this is a perfect example. Seek and destroy template. If we were over here and I was looking at price action and I know that Fed Chair Powell would be speaking somewhere here, just as an example, I know the Fed Chair would be speaking around this time window, and I saw this price action. Well, I'm going to look at what price action has actually done. So first thing I'm going to mark out, and I'm going to do the same tomorrow, is I mark out midnight open on New York local time. I'm going to mark the open price. I want to know what the open price was of the 9:30 open as well. That's 9:30. That's New York open. I'm marking that one down as well. So when that is marked down, then I can look at what price action has done. So after the true day has opened in terms of smart money concepts, we sold off a little bit into New York or in London open kill zone, which is from 2 a.m. until 5 a.m. in the morning, New York local time. And I'm just going to make it normal. So London open kill zone, 2 a, 2 a.m. to 5 a.m. in the morning. And then we have another one. That's the New York open kill zone that starts at 7 a.m. until 10 a.m. Making that one purple. So for the sake of simplicity and as an example, This is going to be on the center, center. If I would see something like this tomorrow in price action, with London making an initial move lower, taking out Asia lows, then making a price swing higher, going for an Asia high or an efficiency, then another run lower, then I already know this is going to be something like a seek and destroy template. So seek and destroy is basically we create a low, we have highs over here, we go after the highs, then we go away for the lower, then we go back for the highs, lows, highs, highs. You, you get the idea, right? It's just one big consolidation range, wrecking the longs, the shorts, the longs, the shorts on repeat. That's seek and destroy. And that's also incorporated in the consolidation before news release. And that's something you could argue is was happening over here. I don't know. I wasn't really noticing anything on this particular day this week because I've been focusing on the indices. But let's say we see something like this tomorrow, and I was looking at price action. I was marking down the time windows to see what has London done, what has New York done. First thing I'm noticing is we have relative equal highs over there. So I would mark those highs down. And we have a bunch of lows over here. Like a trending liquidity. And trending liquidity is just trading stop losses. Well, in this particular case, we don't really have any fair value gaps over there. But for the sake of an example, let's say we have a fair value gap over here with all these lows trending up or down. I would mark this down, wait for Fed Chair Powell to speak, and how the market is going to respond. Because if I know Fed Chair Powell is going to be speaking over here, I'm going to anticipate on what price action likely is going to do. And then I want to know the larger context of price action. So the larger context around here would be we already sold off quite a lot. And we have relative equal lows, trending lows, trail stop losses, whatever. There's liquidity resting below those lows. And we have an inefficiency. Just again, as an example. I would think that price is going to violently respond on what Paul is saying by wicking lower, refilling this inefficiency, taking those lows, and then pump higher, making this pretty much an accumulation phase, manipulation phase, distribution phase, also known as power of three or AMD. Then I would see a more clear context of what price action is doing and what it was supposed to do, which was clearing out the sell stops, rebalancing an inefficiency, and distributing higher, going for price and liquidity. That would be me anticipating on price action. I'm not going to try and predict price action. I'm going to anticipate because at the same time, price might actually just do a quick snap above, going in premium because we are above all highs. We are above the midnight open. We are above the 9:30 open. So that's considered as a premium market. Just as a big wick up, then a large wick down, and then we go lower. That's also me anticipating on price action. Because I would look for trades after such thing has happened. I'm not going to try and go inside a trade right away. That's just stupid to do because that's basically gambling, and gambling we do in a casino, not on trading. That's just not done. So we anticipate on price action. And that's what I'm going to do tomorrow, basically. So let's end this because this is unnecessary right now. So on crude oil and particularly crude oil. So it looks like crude oil is trying to pump a little bit higher for now. But yeah, like I said, the most logical reason I would say crude oil is going to reject from this old gap that has been rebalanced by going lower. Should now be resistance and then go lower for that breaker setup that's over here. So we have a breaker over here, price going lower, then go higher. That's something that I will be looking for tomorrow. But that depends how Asia is going to deliver and how London is going to deliver and how New York is also going to deliver. And that's it for me pretty much on crude oil. That's what I was wanted to say on crude oil. The sad thing is that we didn't saw any strength to go higher because if we were going higher, we would go for these. Or if it showed strength, we would go for these highs. That's what I should say, and that's what I hoped for to see. But we saw just was just such a major sell-off in a couple weeks, pretty much. So huge weakness. But yeah, it is what it is. So for levels in particular, I would be marking down this old gap still. This gap has now already been delivered fully. So I would be marking the close of this particular day, the open of that particular day. Because this is pretty much a new week opening gap. Then I would mark down the midpoint of that particular gap, extend it to the right, mark it down as a horizontal ray, so I know the price of that one. So this is a new week opening gap high, midpoint, new week opening gap low. That's something I would mark down and see how it responds. I would still mark these levels down and see if price is respecting it or violating it. So bullish fair value gap low, bullish fair value gap high. We already have taken this, but I'm still going to mark it down as sell side liquidity. Should we come back down? Then I'm not really interested in the open of this candle that starts the rejection block. I'm more interested in the midpoint since it's such a large wick. It's just ugly, but it is what it is. So the midpoint comes in at around 65.90. So bullish rejection block midpoint. Now what's more interesting, this gap over here. That's between the midpoint and new week opening gap high. And ultimately, we have buy side liquidity resting there, making these dark 1 pixel dashed. So now it's a midpoint, and then making these green. We have the intraday high of this week. This is also buy side liquidity. Then we normally also have an intraday low of the week. That's sell side liquidity. I'm going to be marking down anything more than this. I would say we have a order block from this price swing, bearish order block, which is also a little small volume gap, very small volume gap. But I'll mark this one down. Order block daily. And that would be for me the levels on the daily chart that I'm interested in. And then based on if it starts to violate this fair value gap or this larger fair value gap, I'm going to be looking for either higher or lower, basically. That's how I am going to approach oil at this point, since it's still in a range. And after this already large sell-off, I'm expecting more bullish upside. Going back in this new week opening gap, inside this fair value gap perhaps. That's something I am interested in. But yeah, then again, we have to wait tomorrow, and based on tomorrow, we can anticipate if we are going higher or lower. And that's all I had to say about oil, pretty much, for what I'm expecting. The sad part about oil is that it's so range bound. It's just annoying that it's so range bound. If it was trending, it was so much better. And with range bound, I mean the higher time frame range bound. Because when the higher time frame is range bound, you get things like this. I mean, I guess it can still give good swings intraday or mid time frame, like 4 hour, but there's no clear direction. That's the annoying part. So these are the levels that you can work with, and I hope you guys enjoyed this. Uh, Understood what I was saying. If not, leave a comment. Tag me on Discord. Join our Discord, and I'll see you guys in the next public stream. I believe I will be talking in the next public stream. I will be talking about Nasdaq. I think I'm going to be talking about Nasdaq in my next public stream because Nasdaq has been interesting, and I want to see how it progresses in the next few weeks. That's that. So I thank you all for your attention because there's also been around an hour already, and I'll see you guys in the next public stream. So these are the levels that you can work with, and just await tomorrow on what price action is doing on the Fed chair speaking. And remember, anticipate on price, don't react on price. Don't chase it. Get confirmation and don't try to predict it. It's like gambling, and we don't gamble. We look at this as a business, right? And that's how we should approach trading. So again, these are my levels that I'm not interested in to look for trades or reactions or anything. And then I'll see you guys in the next public stream talking about Nasdaq in a few weeks, probably. So thank you for your attention and see you guys in the next stream. Goodbye.